And thank you, Adam, for being here just after New Year's. Happy New Year to you, buddy.
Happy New Year to you too, and the whole team there.
So, Adam, you want to share your screen? I
What we
think
got
Blake
now?
is still sharing
Oh, just shit.
sometime.
Somebody
There
got.
we go.
I got the video on
Okay.
here.
All right. Well,
We'll
then
share that.
I'll bring the charts up so we could talk. You don't want to see me this morning. I guarantee that.
It's early out there.
So, yeah. So, what's top of mind for you, Adam, coming into the new year? We started off with a stronger dollar. Things like Apple are getting wrecked with Tesla. A lot of pressure on risk yesterday. Crude's giving up the ghost in the last week. A lot of pressure on different markets. Where are the opportunities?
Yeah, you wonder early in the year, always, and late in the year, whether it's flows or fundamentals, or if the market's really reacting to something, or it's yesterday maybe need for dollar liquidity, today things reasserting themselves. Oil, there was a lot of speculative money in the CFTC data just in the week before Christmas, so I think maybe that kind of popped it up, and now it's giving it all back, although maybe a little bit more. I'm on a momentum trade to the downside. Seasonal is very good for the dollar and the yen this month. And then I guess the news early in the week was a report from Nikkei that Japan's probably going to raise, the Bank of Japan, its inflation outlook on the 17th, I think, of January, and they'll put it up at 2% for 2024, which would argue for a normalization of policy. And it's that, I think, is a fundamental difference. The rest of it, I think, it's just in the ebb and flow. Yeah, you guys talked about Tesla. That's giving it all up. But that, I don't know if it's a macro story. I think that's a Tesla story, as much as Elon Musk would make it a macro story.
It's
Meanwhile,
a Twitter story.
A Twitter story. I mean, Apple, though, is also coming off, and that's the one that's got me a little bit more worried. I'm kind of on the macro side, because not that much has changed with Apple. The usual, there's that line, right? And it's cracked those June lows.
Yeah.
And there isn't a lot there below that. I mean,
there you go. So I mean, this whole formation measures $80 back to the pre-COVID high.
So 82, I was looking at it yesterday. That's when Warren was buying. It was around $10 EV to EBITDA. And that would be, it's like another 35%, and we get you back to kind of when Warren Buffett was buying with 2015, 2018 kind of range.
Yeah, that was
and
a
even you can argue
high.
Then, you had sort of more embedded growth. You had a kind of higher growth profile. Obviously, he saw it. Who knows what the future has for Apple, but
you think there could be a China factor in Apple as far as manufacturing or demand or something, that everyone's interpreting the reopening of China as being bullish, everything, commodities, and so why is crude breaking, and is it really bullish, or are we in a worse situation because when they had a lockdown, people still could go to work, and if everyone's getting sick, how do they work?
Yeah, I mean, I just think the market will look through that. You're right that it could really throw things off in Q1. Those subway numbers were out yesterday. I thought that was pretty encouraging, that it was up. There was an uptick in the dozen biggest cities.
Oh, that's a good stat. I never thought of that.
Subway use. So they kind of passed the peak already. Yeah, obviously. We had the China PMI was out yesterday. It was terrible, but I don't really take a signal from that. But you're right. The market isn't. Crude would have been one. Although you see stuff like iron ore is ticking up, copper's held up. We've talked about that before, so I think that's kind of where my eye is. And I think China in general, like what was Alibaba up 7% yesterday? I think we talked about that last month as one that.
Yeah, the Chinese stocks are really the exception to the rule.
And if I talk about my 2023 outlook, there's a lot of uncertainty out there, but I think China is the simple trade. It's China is the U.S. in June 2020 right now. It's reopening, the government's spending, and they didn't spend really during the pandemic in the same way that other countries it was the greatest fiscal expansion in history. But China's kind of kicking that off as they reopen, which is a bit of a different playbook, but it's bullish.
There's Baba.
I don't know what that pre-market line is, but I think it was up 7% overnight at one point.
There's a daily. So I mean,
Yeah, so it's 98 there now, up to, I mean, it's been
okay.
a
Yeah.
nice, so it's breaking out here again. And that it was trading at like 4 times earnings at the bottom there. And like that company has not a lot of debt. So it was still stupid cheap. And a lot of China. I mean, I don't know much about Alibaba, their business, but you know, the whole Chinese market, I think, is just the simple trade, and it's the yuan too, should strengthen along with that. But anything really touching China, I think, is probably it doesn't 2023. I don't think really needs to be any more complicated than that, because there are a lot of downside risks for tech, North America. You know, Europe has its problems, just global growth in general, but China's cheap, it's reopening, and it's reopening fast.
I bring up a topic that we hardly ever talk about, this emerging market currencies. I talked to Tavi Costa a week or so ago, and he never talks currencies, but he's very bullish Brazil, Adam, and he liked these pairs, the real against the yen and the real against the yuan.
Next time I come on, I'll bring my own charts. But it was an interesting one yesterday. It was a Deutsche Bank chart I had up, and it was all global markets, right? And the Bovespa in Brazil was really the best market in the world last year. And it's not just, you know, politics kind of changed there, and I suppose a lot of people like that, but it was commodities, right? It's commodity currency.
Producer.
Right, you know, and
everything, mining, grains, everything.
And so there's a lot to like. And I mean, we were in 2000, that kind of era, everything touching Brazil, really had a nice run there. All of Latin America. I'm a bull right from Mexico all the way down to Argentina. And it's really the same story in almost all of them. And it's
El Salvador, their Bitcoin economy. Are you constructive on that?
Well, what's the trade on that?
I just thought I'd bring it up.
But I like Mexico a lot.
I
think we've talked about that. But Brazil, exact same story. Really, you know, bigger economy. You know, I think that Mexico benefits from that kind of friendshoring, they're calling it. They will be building a lot of factories. And you mentioned Tesla again. You know, I'm not a bull on Tesla, but they're going to announce any day, or might have been announced today, a gigafactory in Monterrey, Mexico, which that city looks like it's going to be kind of the heart of the Mexican, hopefully, industrial renaissance.
A lot of American expats used to go down there to retire, and now it's getting industrialized.
Well, right? I have long said that Acapulco real estate is going to be a great investment. One day the violence will end in Mexico, and that is, you know, it's been a bloodbath right around there.
Second coming. Anyway, you know, let's get a little bit more just macro on the dollar. Where's your head at, Adam, after this big break in the dollar here? Is it due for an interruption here and some type of bear market rally, if it is a bear market?
Seasonally, January, second best month for the dollar.
Okay.
And so you know, obviously off to a good start, although it gave most of it back.
Yeah, it gave a lot of it back.
But so the way I see 2023 is that the U.S. consumer is going to hold up better than expected.
Okay.
And I think that's my call. And not only that, but better relatively than global consumers. And the number one reason why is the structure of the U.S. mortgage market. The 30-year fixed is like a superpower for Americans.
Yeah, they're all in at 3.
If you bought anytime 2021 or earlier, you're at 3. And I think a lot of people still haven't even benefited from that. Like, that's almost stimulus in the pipeline for the U.S. because, you know, those people haven't been able to travel as much as they want. And they went from having it might have been a $1,300 a month payment to maybe $1,000. Like, some people refinanced in a really good way there. And that is just money in the pocket every month. Now, I know a lot of that's been eroded by inflation, but it's cushioned it. Whereas you have in the rest of the world, Canada, for instance.
Like Canada. Yeah,
Australia, Canada, Australia, the UK would be the 3 that would be hurting the most. New Zealand as well. You know, you have that same inflation, but you have mortgage rates going up, you know, tremendously. And people 40% on variables, the rest on 5-year
Wow.
rolling fixed, so 20% of the remainder rolling every year. To, you know, you hear people's payments are going up $1,000, $2,000 a month, and that's just going to obliterate discretionary spending in the rest of the world. Whereas the American, you know, the typical American, how much are they really hurting from higher rates? You know, even if you have a car payment, it's fixed. If you have, you know, a line of credit, sure.
They're
But
walking away from cars here, Adam, because
I know I'm worried about cars. I really
okay,
am.
because they have $1,200 car payments. Because during the pandemic, I think auto dealers were doing like 7-year loans, and the financing was ridiculous, and people felt they were making money on their home. It was still an ATM. They had revenue coming in, but they're walking away from them because their car payments are more than their mortgage, as you were saying.
Yeah. And I don't like, yeah, I could see that, and I could still see spending holding up, you know, in a scenario like that, better at least than Australia, Canada, UK,
Okay,
a few other markets.
relatively better. Okay.
You know, the American consumer, never underestimate the power of the American consumer. And I think that's going to be as long, you know, the way the Fed really impacts the consumer is via the jobs market, right? They have to have at least some employment uncertainty to cut down on spending. Otherwise, the spending will continue in America. And I think that is going to be the American consumer holding up so well in the first half that the Fed has to start thinking about either hiking again, or the rest of the world weakens so much that the US has a better inflationary picture. And part of that might be dollar strength.
Okay, interesting. So then, you know, we're going to test the theory on Friday. You have any feeling for what the numbers are going to be?
Well,
especially wages. Wages are real sticky lately.
Well, that's where that's going to be the spot to watch. The initial jobless claims, non-farm payrolls, and I just don't think the claims numbers are anywhere to worry about yet. And so there's variance in non-farm payrolls. I think it's probably been overstated for the last 6 months. If you look at the household surveys being weak, so we might get a couple weak dollar prints. Again, that's just going to make for that very rocky picture in the market. You know, you have a lot of people pricing in a brutal recession or talking about it anyway, and then others pricing in sticky high inflation. And I think the Fed's trying to be in the middle here, where they're threading the needle. But you know, there's these two camps, and I think it ends up being sticky high inflation on a solid economy, but it's not going to be a pretty picture, pretty path to get there. And you know, if we get a zero employment print this month, then we'll see a lot of dollars selling. It's one data point to another.
Okay. So that's going to be a market mover on Friday. What's going on? You know, I think today might be decisive in the loonie. You know, we got back up to this 37 level, and it looked good until today. What pulled the plug on it, especially with oil sharply lower and everything? This is a pretty negative day in Canada.
Yeah, I wouldn't. Yeah, it is. That's a surprising one to me, given what, like you said, oil.
Yeah.
You know, the inflation numbers have been hot in Canada, but I don't see any kind of justification for that. Again, it comes back to that, okay, it's the start of the year. Is there some kind of CAD flow that needs to happen today? I don't know, some M&A happening out there, some deal, something like that, because I mean, it's all over the place today. I mean, the dollar is getting sold. So Aussie, you know, Aussie's up double what CAD is.
Yeah, just on some China coal deal that they're going to start taking coal or something.
I mean, so, you know, I'm just a lot skeptical of some of these market moves we're seeing today, that I should be reading too much into them or into the charts, even something like Apple cracking. I don't know why you would be selling on the first day of the year in Apple. I mean, that tax loss selling is over, but I you know, it's too, I'm not trying to take signs from the price action this early on, at least until we get to see the market react to some data and get through non-farm payrolls. But yeah, like you said, that's a surprise move in CAD right here. Is, you know, there's nothing. I mean, oil's down $5 in 2 days. That's
yeah. So maybe it's not just about not paying attention to action between Christmas and New Year's, but even a full week after. because part of the world is still on holiday, right?
Yeah, and they moved,
Europe.
the US tax loss selling deadline now was on the 30th. So you had a lot of machinations around that. Now you have kind of money rotation. Well, I'm not sure, that you can never really front run those kind of rotation trades. You have this feedback coming from bonds. We're very strong to start the year. Super strong again on bonds today. So, I could see the argument why people are buying bonds, the uncertainty, and yields just really coming down, the US and Germany today. So again, that I think is you get these intermarket correlations, right? And people rely on them, but I wouldn't rely on them at this time of year.
Yeah, that was my New Year's resolution that I broke yesterday during F.A.C.E. I said I'm never going to make a trade based on a correlation, and treat each instrument like it's its own individual entity. And then Ryan busted me because 30 seconds later, I started talking about the gold silver ratio, and that's why I was a little more negative silver. So, old habits
Yeah, and
are
I
hard
think
to break.
there is the time and place for it. And I'm a big correlation guy, but I just think, I wouldn't put too much weight into it right now. And so,
okay. How about crypto this year, Adam?
yeah.
I mean, we had a, nuclear winter.
Somebody got an alert on dollar CAD. Yeah, it's not looking great. I'm struggling to find any enthusiasm.
Yeah.
And I think, price
Not
action
much to
can
talk
create
about.
enthusiasm. It has held out okay, considering. We're going to have this guy on trial now in October, so that's headlines. What's the catalyst? Maybe the Fed turns, maybe the market turns, but I don't really see any kind of a catalyst.
Okay.
Copper, you've got to see it up on your screen there. If you look at the copper,
you're very bullish copper.
It has had, the copper miners had a strong start to the year. It's a long-term, the commodity I don't love as much as, I don't know if you can pull up CopX, which is the miners, but it just goes, they go up even on bad days.
Like the oils did last year?
Yeah.
So even when copper's down, the copper shares
right
are
above
going
BABA
up
there. And it's just been, I think that's going to be the spot to be. No new mines are coming online. I see that question. I mean, there are the ones that are in the pipeline for 2023 are there. You've got a few big ones in Indonesia and Chile, but the long-term picture for copper, it's just getting tighter and tighter. And it maybe even be tighter this year. So that's kind of coiling up. I mean, if you think about a weaker global growth, it's not there.
I'd buy a break here.
Yeah, I mean, listen, I'm not saying now is exactly the time, but it's the spot I'm watching. Maybe it cracks lower or first before it goes up, but it's pretty convincing bottom last year.
Yeah, so here's my preferred narrative.
China's open.
Tell me what you think. We get this washout in stocks. That pressures even things like copper, and things that hold their October low, should that washout occur, are your buying opportunities. So have your list ready if we get the washout. Everything is all one market, right? So we'll have pressure in everything, I think.
I see the argument because you're going to have the Fed come out, I think, every day between now and the end of February and say, hey, we are going to get to 5.25% or above 5. And the market is trying to say you're not, but like that headline is just pounding you on the negative side. Especially there are some even more hawkish Fed members out there. Again, it will come back to the data. We'll see. German inflation was a little low yesterday, but still at 9%. So.
France came in lower. The guys pointed out today, France's inflation
and I mean, you see the commodity prices coming down and energy in Europe coming down. I mean, the weather trade in Europe has been sensational. They're breaking all kinds of records this January for heat at just the time when they needed it. It's remarkable. Stroke of good luck for all of Europe, because I saw one, some of these records are like 6 degrees Celsius above the old record, 20 degrees, which is, I don't know, like 80, 75, 80.
Wow.
in Poland
Stella's
and Czechia.
bragging about
Yeah,
Greece and Spain, and yeah, they're all look at as natural gas, the widowmaker.
yeah.
I
Well, it's
wonder
the
how
weather, right?
many. I wonder how many guys died being
Yeah.
long nat gas here,
Hopefully
and
they took the holidays off.
now they have widows. So my phone number is seven. I can manage your money anyway. So what do you want to wrap it with?
Well, I mean, I like it on the FX side. I think Aussie CAD are very vulnerable on the housing. I think we are headed for another round of pain in those housing markets now. It was on the fence. You listen to mortgage brokers now. It's not a good scenario. People are trying to find a way to stay in their houses. But these, I mean,
Yeah.
we're talking $1 million houses that aren't, they're $2 million houses that don't look like $2 million houses that have, you know, a million and a half in a mortgage.
What are they really worth in a bad market if they don't go to foreclosure? 500
Yeah,
grand?
well, that's going to be the question
Yeah.
that gets answered, and it's, I mean, it's a tight rental market still, so I don't know how it ends up, but like that payment on $1.5 million mortgage, it's $1,000 every percentage point, and we're talking 3 percentage points, just like 1,500 every percentage point. So, I mean, people are just getting smoked on the resets. Europe's still a weather trade. And the US consumer holds up. And then it's just data trading. I mean, we saw it in the last couple of months, massive moves on every data point. And I think you just got to be really dialed in when the data is coming out, you know, the intricacies of the data, which data points matter this month, and what
Fed minutes matter today, Adam?
Yeah, I don't, I mean, the minutes, I think they could.
Maybe for a minute? The minutes for a
minute?
Yeah,
maybe. I mean, again, it's going to be that idea. Yes, we're going to have to hike more. Yes, that inflation has been more sticky. Yes, service sector inflation that Powell was talking about. I can't imagine it says anything other than the hawkish message that the Fed delivered. But, you know, the market might latch onto something a little less hawkish. So, but I would be worried about that. And then, yeah, we'll just watch China reopen and we'll go from there. Did I miss any questions in the chat? I hate to miss a question.
Let me see. Oz has surged on rumors of China coal. What's your opinion on fading moves and rumors like this, like the Aussie move?
Rumors of China coal deal?
Yeah, rumors of China coal trade ban lifting. That's what people are attributing to Aussie strength.
I mean, China, I mean, it makes sense to spread the rumor right now. I mean, that you got to trade rumors if you're trading China. I mean, the rumors of reopening were founded. You know, 2.1% is a lot on even that move. I know it was material in Australia, but they need the supply. And I guess they're just going to walk it back in China. I mean, it's funny how they're making up policy as they go in China, right? You think of China, first of all, you think of China as like long-term strategic planners. Right. And then you think, well, at least they're decently organized. And then now with COVID, they just kind of threw the doors open. And now with this, if they do fold on Australia, they kind of played tough for, I don't know, a year and then just gave up.
Yeah, the emperor has no clothes.
Well, I mean, everybody faces a pressure to keep the party going.
Well, Adam, you know, you're a great trader, and you really have your finger on the pulse of things. So I know most people here know they could find you at Forex Live, but what section of Forex Live, say I just wanted to catch your content on the site, where should I go?
Yeah, it's just, you know, you can follow my name. If you click my name there, you can get the Adam Button articles. If you're trading, our tags are really well organized right now. If you're trading some certain currency, we've got a lot there. And we've got an education section as well. It's all free. So, or you can follow me at FX_button and on Twitter but mostly at Forex Live. You're going to get a lot of news fast. And I think news fast right now, and incisive analysis on what it means quickly is the trade in 2023.
All right. Well, Adam, you know that I'm a fan and root for you and your company, and hope that 2023 is one of your best years ever in all ways.
Yeah, well, we're coming off a good one in 2022. You know, stayed on the energy trade there and avoided a lot of the pain. So caught a nice year, and we'll try and steer in that direction again. Gold. We didn't even mention gold, Dale. You know, we're both precious metals bulls. We didn't even get to talk about it, but
I'm short silver right now, Adam. So here's your buy point: 22 to 21.
All right.
Start buying.
I'm a gold bull. I'm a gold bull. I'm a gold miner bull. And,
all right. So forget the silver. I don't know. It just keeps marching along. Newmont looks great, but it's diverging. Here's Newmont. The gold miners look much better, but then you look at GDX. It's running into some resistance. I think there'll be a break. Again, if the S&P washes out, they'll take the miners down. They'll take copper down, and just have your shopping list ready for that event.
Yeah, I like it. I like it because, man, you see some of this. If tech keeps cracking, we'll see some opportunities. Coach. All right. I saw someone, I don't know about the Twitter issue you had. You can email me at adam.button@forexlive.com. I'll take care of that for you. But great talking with you, Dale.
Yeah, you too, buddy. Happy New Year, Adam.
Yes. Good luck.
Adam Button, everybody. One of the best traders on the planet. I don't know about any other planets, but this planet, I know he's one of the best. So
that's a good thing too.
All right, take it easy, everyone, and thank you again, Adam. And you could join the team in 17 minutes on the morning edge. Thank you, everyone. Don't just count your gold bullion coins and silver coins, and count your blessings. See you guys tomorrow.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.